I sold a stock today.
How do you feel about it?
Mixed. I actually had a target price, but I was at work. I couldn't watch my phone. By the time I checked, it was already dropping, so I panicked and sold before it went below $500.
And you got the lowest price of the day.
Yeah.
You had the right instinct. You even had a target, but you didn't have the right tool. Today we're fixing that, using your actual situation, because you're also holding another stock with a real thesis. And when the time comes to sell that one, you're going to do it right. Quick note, nothing in this video is financial advice. We're sharing our own experience. Always do your own research before making any investment decisions. Today's video is built around two real trades, one already made, one still being planned. Here's what happened. You held a tech stock that ran up a lot over the past year. It became a large chunk of your portfolio. You had a price in mind, below $500 you didn't want to hold. That's a real framework. But you were at work when the moment came. You couldn't watch the market. By the time you checked, the stock was already falling. And instead of sticking to the plan, you panicked and sold at the worst price of the day.
I had the target. I just couldn't act on it.
Right, and that's the most common version of this mistake. Having a plan, but no way to execute it automatically. The fix is a limit order. A limit order tells your brokerage, sell at this price or better without me touching my phone. You set it the night before, go to work, the order fills when the price hits your number. You check your phone at lunch and it's already done. At the price you wanted, not the price panic gave you.
I didn't know you could just set it and leave.
That's exactly what it's for. A market order says, sell right now at whatever price exists. A limit order says, sell at my price on my terms. For any meaningful position, always use a limit order.
And if the price never hits my target?
The order doesn't fill. You reassess the next morning. That's fine. Infinitely better than panic selling at 2 p.m. Now let's talk about the stock you're still holding. Tell me about Nike.
I'm holding Nike. I'm waiting for FIFA.
The FIFA World Cup 2026 this summer across North America. Nike kits Brazil, France, England, the USA. Some of the biggest names in the tournament. Massive global exposure. That's a real catalyst. You know why you're holding, what you're waiting for, and you have a timeline.
But I still don't know at what price.
That's what the numbers are for. Knowing your thesis is step one. Knowing what to watch so you can tell when it's played out, that's step two. First, the PE ratio, price to earnings. It tells you how much investors are paying for every dollar of profit. Nike's trailing PE right now is around 30. At the end of 2025, it was 37. So it's come down. But here's the real question. Is 30 actually cheap by Nike's own standards, or just cheaper than last year? One data point doesn't tell you enough. You need to look at the full historical chart, 5, 10 years, to see where 30 sits in context. If it's low by history, there may be room to grow. If it's in the middle of the range, the picture is more neutral.
So I can't just look at one number?
Never. Context is everything. Look it up yourself on Macro Trends or Yahoo Finance. Search the ticker, go to the PE tab. 2 minutes. The second thing, forward PE. That uses estimated future earnings. If it's lower than the trailing PE, analysts expect growth, which makes the current price look more reasonable. The third check, analyst price targets. Nike's consensus target right now is above where the stock is trading, meaning analysts still see upside. Compare that to the stock you trimmed this morning. That one was already above the high end of analyst targets. Very different.
So that trim made sense based on the numbers.
The instinct was right, the tool was wrong, which we already fixed. Now the FIFA catalyst. When you're holding for a specific event, your sell framework changes. You're not just watching valuation, you're watching whether the event is delivering what you expected.
So what do I watch?
3 things. First, revenue in the quarters covering the tournament. If revenue accelerates and management calls out FIFA, the thesis played out. If numbers are flat and they barely mention it, the catalyst wasn't as big as expected.
And if the thesis plays out, that's when I sell?
That's when you consider it. Because the second thing to watch is what happens before the tournament starts. Markets are forward-looking. The FIFA bump might get priced in during the build-up. The stock runs up in anticipation, and by the time the games kick off, the good news is already in the price. Buy the rumor, sell the news. That might be your signal, not the tournament itself.
Watch the price before FIFA, not just during.
Exactly. And third, Nike's broader turnaround. Losing market share to On Running, Hoka, New Balance, new management, a restructuring happening. If the turnaround is gaining momentum, that's a reason to hold longer. If FIFA provides a pop, but the fundamentals stay weak, sell into the strength.
FIFA plus the turnaround. Both matter.
Both need to be working. If only one is there, start thinking about trimming. So when the time comes for Nike, how do you sell without repeating this morning?
Set a limit order before I even get to work.
Decide your target, set the order, go live your life. Say $60. Set it tonight. The order executes automatically while you're at work. You check at lunch, already done, at the price you chose.
I wish I had done that this morning.
Also decide how much to sell before you place it. Figure out what percentage this stock should be in your portfolio. Calculate how many shares to sell. Math done in advance. By the time you open the app, the decision is already made.
Nothing is decided in the moment.
Nothing. Decisions made in the moment. When the price is moving, when you're at work, when you're emotional, are almost always worse than decisions made in advance with a clear head. Here's the framework. Check trailing PE and forward PE against the full historical chart. Check analyst price targets. Check your thesis. Is the reason you bought still true? If holding for an event, ask if it's already priced in. And when you execute, set a limit order in advance and let it do the work.
And if this sounds like too much work,
buy an ETF. This is what individual stocks require every single time. Most people who do all of this still don't beat a simple all-in-one ETF. ETFs are boring on purpose, and boring is how you build wealth.
ETFs never give me headaches. Individual stocks always do.
Because stocks require this, all of it, every single time.
Lesson learned, at least for this morning.
Set the limit order tonight.
If you are holding individual stocks and not sure when to sell, you are not alone. Like the video so more people find it.
And if this made you think twice about individual stocks, we have 2 videos you should watch next. Stop buying dividend ETFs. Why chasing income from stocks is usually the wrong move. And the buy the dip trap. Another emotional mistake that costs investors more than they realize. See you in the next one.